largest crypto website.
Hey viewers, welcome back to BlockTalk. I am with Nisha, Jeno, and Kumar to see how last week's October really went down October and everybody is a sea of tears. Now Nisha will delve into the last week's news.
So, guys, the first news that we have here is $19 billion has been wiped out in crypto after Trump's China tariffs. So, what are your opinions about this?
So that was the biggest market crash which anyone has seen in the whole history of crypto. Like people say it's even bigger than the Luna and FTX crash, and it did hit the headlines so much in the recent days. If we see the macroeconomic conditions, Trump imposed a 100% tariff on China again. Like it's like third or fourth time I guess he's doing it. So I thought this news would not affect the market so much, but within the same period, there were so many other things also going on in the market which induced a cascadation of liquidations around.
Like if every time Trump is imposing tariff on some other country, if the Bitcoin price goes this much lower, it would have been like trading around $65,000 right now. I think that's not only the reason the Bitcoin crashed that day. Maybe it's because some other reasons also.
Yeah. So we will explore those kind of reasons which people tell in internet in today's episode. But as a trader, Kumar, what's your opinion on this? Why there was a biggest crash, or you have any?
What I would say is it's not the biggest crash that we have seen in a single market. I mean, there were bigger crashes with the big market in Bitcoin. There was times where it crashed by 50% in a single day.
Okay.
So it happened many instances. Those are the biggest crashes. But now the market has grown so much. There's so many traders, so many platforms, and especially when this crash which happened was specific to Binance.
Yeah.
The funds were so concentrated with a single exchange. And this exchange also had offerings of just not the blue chip, whatever the big tokens, they also had other tokens.
Yes.
So the money was also into the other tokens as well.
Yes.
Bitcoin did crash. It was a big crash, but it was not the biggest crash.
Okay.
Right? The Bitcoin crashed by a few percent. The other tokens which are pegged to it, or the markets which are moving in a similar direction to Bitcoin, fell down by almost 80% each.
Yes.
And there are many tokens that actually fell by 80% in a single day. So these many tokens crashing in a single day with almost the entire rug pull, like 80% crashes just in a single hour. So because of those losses that every individual token made, this news became bigger. I mean, the loss is definitely big. The loss is very big, but the loss is just not from one token, it came from multiple tokens. And because FNO, people have started investing more on FNO.
Yes.
Because there's leveraging also that is possible there. So the liquidations happened.
Yes.
Right? If the same crash should have happened if you were on a spot
markets,
it fell down by 80%. So let's say you put 100 rupees, it fell down by 80%. Still you had 20 rupees in stock value.
Yes.
Maybe it would have gone back to 100 someday. Here what happened, it fell down by 80% because there was leverage. A lot of people who had borrowed loans for the trade have lost that money, and they were forcefully liquidated.
Yes.
Because they didn't have enough margin to support their So here what exactly happened was, as you know, futures is all on the derivative market. Here in spot you had at least 20 rupees left. There you have nothing left. In fact, whatever you put in, plus because of leverage, whatever you taken, whatever you had some wallet balance to support your trade, even that got wiped out. That is a very painful experience.
So leverage is the main culprit in wiping out effort, like which happened. The leverages had so much effect, like even if you had just 2x leverage, there are markets where you can have 30, 50, even 100x leverage.
Which is possible in crypto. Maybe no traditional markets give you such high
leverages. But still, in traditional markets, you can have at least 2x leverage, right? Even
4x is what the thing
is the max. Okay.
Not a max. It depends again, but a lot of platforms offer 4x generally.
So what happened here is even 2x margined positions got liquidated. The swing was so much and the volatility was so high, either if you had a long or a short, your margin is gone.
Correct.
So that was really painful for people. And as you said, if you were in spot, then you were safe. And another thing is people are pinpointing to the single, as you said, the volume is being concentrated on a single location. People are pinpointing that it's because of Binance. That too, Binance had a issue with their price oracles in some particular 3 assets. Like one is USDE, which is Athena's USD, a stable token. Another one is WBE, wrapped Binance Ethereum, and Binance Earn Solana. So
the formulas for to derive those prices of the tokens
yes,
is much complex than what could be explained, right? You can't explain those formulas even on a single paper. Sheet of paper.
Yeah.
So complex.
Yes.
Then these prices are not absolute prices. They're again a derived price.
Yes.
With taking price of some multiple sources and combining it and giving it out.
So Binance had a weak point. As you said, they derived the prices just from their own exchange. They just saw the prices of their own spot markets, not the overall markets. So what happened is somebody did a very huge sell in the spot market of USDE, and that crashed the price by 40%. The stable coin came to around $0.6, the stable coin itself.
Okay.
But overall market, it just came around 0.9. There was not such a huge dip. Other markets were safe. But just because Binance, some party crashed it, the oracle got manipulated, and Binance future contracts started to think that now nobody has margin left.
Correct.
Everybody's margin is worthless. Let's start to liquidate. The liquidation engine started to kick in.
Correct.
Because of this, Binance have now announced a compensation of $236 million.
That's peanuts.
That's peanuts, you're saying.
Out of the loss that what people have seen. That's not even 1% of the loss, right?
And they're also not accepting their mistake. They're saying you leverage your amount and this is not a thing. You have to accept it. You know the market. So this is their answer.
Yeah, like even if you go to Binance market right now, in futures, there's always a tag. You should only trade if you know you can lose all your money. They always put out that disclaimer out that you should know that you can lose all your margin in futures. But still, I mean,
It's like this, now you go to a casino, you lose your money. Now you can't date the casino that
you can't try in a casino. That's
I lost the casino.
Yes, sir, but the casino has to follow certain rules for the users not to lose that much money. They even tweeted their own bug in the tweet for 8 days. That made the scammers to sell off 19 million worth of stablecoins sooner.
90 million. Yeah, the spot sell was 90 million.
So it made the price of stablecoin go to 0.65. So they literally gave the key to the thieves.
But in crypto markets, you can't say them as scammers. You can say them as sophisticated guys who just spotted the markets and everything. Like, there are so many, crypto has so many brilliant minds. That brilliance can be used for betterment of the group or evil things like this.
Right.
Both the ways, there are brilliant minds around.
So from traders or investors' point of view, how many days does it take to bring back to normal, or what all wiped out or at this?
For an average trader, you are saying.
Yeah.
Whatever I've heard is that people talk about this crypto winter, right? Like the price have gone up so high, there's going to be a drop, there's not going to be any drop. The market is just going to be wherever it is without any significant move. That's what we call as this crypto winter, right? So I don't know if it is arrived, but the situation looks so gloomy, saying that this is the start of the crypto winter. And people are really scared to infuse any new cash into this market after the recent loss.
Yes.
So that's a bad sign. I mean, when there has to be money coming in.
People are scared of it. It might start trade, they'll be very scared because of this time.
So that trauma is still alive. I mean, a lot of people have switched off their systems and switched off them since also.
Yeah.
Some people are also switched off permanently. They committed suicide. I mean, it's a big loss. But what is very concerning is the industry being so small, and there are some influencers or some people who are trying to promote this ecosystem. It's taking a mental toll on them, and I mean it's not a good sign for near future.
So we need definitely users to develop whatever we are investing. If the new person is coming, he will not be knowing the news of people getting profited. So whenever they come, if they do certain researches, if they see okay 19 billion wiped out, okay, I'm not getting into this. So
This news has definitely created the entry barrier, at least psychologically,
Yes.
saying that the biggest of the biggest people also can lose money. In a couple of minutes or hours. That's how dynamic the market is. Now you take good advantage of it, like how this handful of people did this time, or it depends how people take it. And when you look at Binance also, Binance is not a very traditional business as such. It has not been in existence for, let's say, a couple of decades or a century also. Right? When you look at any big trading houses, they have the credibility built over the years. That trusted customer base, trusted platforms, that needs a lot of time. Binance became too big, too quick. A lot of funds came to them, is handled on their platform. So any small movement on their platform gets about this kind of change. People can move their money from Binance to other exchanges. And there are other exchanges. Binance is one of the popular choice, right? Now after this crash, people will double think, again the popular saying not to keep all your eggs in a single basket. So it's better to have it in multiple exchanges, because this crash happened on a single exchange. This being the biggest one, and unlike your traditional trading exchanges, of course there are bots, there are computers that place trades on your behalf.
Yes.
But Binance is a new product. There are so many features, so many new product offerings on Binance. There will be flaws. It is not tested for centuries with so many people, right?
Yes.
So there will be flaws, and there will be people who will be keenly watching for the flaws, to take advantage of it. I mean, they have successfully taken advantage this time. But the better thing is, if Binance opens their eyes at least now, from this situation not to happen again, probably that should be a good move, at least to raise confidence among the investors to come back into the markets. Yeah, I mean, we can't entirely blame Binance or anyone in specific. That's the risks. What you have to understand from this thing is, there are risks. There can be failure points from any point, any angle. Now, $90 million wiping out almost 19 billion.
Yes.
Right?
Yes.
And okay, fine, the compensation is what they're saying is very high, but that doesn't cover up to everyone's loss.
Yes. Negative.
Let's see how this goes.
Moving on to the next topic, which is very related to the same one. So we saw that perpetuals and leverage trades were the main basis on which everybody got wrecked. So perpetuals as a financial instrument itself, let's have a class. What is perpetuals first of all for newbies? Let's think about it. How is it?
Perpetuals is basically where, to layman what I understand.
Yeah, we can be layman. Yeah, the system.
For placing a trade. Now, right now, okay, what are perpetuals? What are we talking? All these are derivative markets.
Yes.
Okay, so let's say there's one Bitcoin. You buy one Bitcoin. You pay a full price of Bitcoin. You give, let's say, $100,000 and for one Bitcoin, and they give you one Bitcoin.
Yes.
So you gave them $100,000, they give you one Bitcoin.
Yes.
Right?
Yeah.
So this transaction is recorded on the blockchain. Right? This Bitcoin went from this person to this person. Why it went and all those things is again understanding. I paid some cash and they just give me this thing. There's actually transfer of an asset.
Yeah.
When it comes to derivatives, you are not buying the stock directly. You're not buying the Bitcoin directly. You are betting on the price of the Bitcoin on a different market. The price on that market is decided on this primary market. The prices are generally similar, right? So the trade that happens there is basically bet that you're taking, either it will go up from this point or will it go below this point.
holding the coin, without holding the coin, we are betting on the particular.
Correct. You bet on a coin. Saying they would, you're betting on the direction of the movement of movement.
You're taking longs and shorts of the.
Yes. And you don't hold the currency at all.
You don't hold the currency.
Everything is either dollar settled or the coin settled.
So in the derivative markets, you can't bet forever. There'll be some time limit saying that this bet is valid till. like this coupon is valid till this time. So there'll be a expiry time. So within that time, whatever call you've taken, let's say if you say it's going to go up, and if it really did go up, you make money. People who have said it will go down, they would have lost money. The people who have lost money, that money will be transferred to the people who won it. So that's how this game follows up, right? In case of perpetuals, because there's a time limit that specifies that this contract will, or this deal, or this bet will end on this time. Perpetuals is like there is no time limit. It always is on, the market is on until you manually exit or you're forced liquidated, like how it happened this time.
Yes.
Right? So that's how perpetuals work. Now coming back to Nisha, what is the advantage of using futures and options in derivative markets is, even if let's take normal stock market, when there's actually share that is transfer 1% from your demat account to your demat account, and we are trying to sell it out. When you sell it, you have to pay capital gain taxes. Whatever money you made, you have to pay capital gain taxes. In futures and options, you don't, because you don't own the stock directly, you're just betting on it. Whatever the money you make on it, or you lose on it, right? It's basically under your tax slab. Especially, I'm talking about India, right? So it's under your tax slab. Let's say you make someone who makes 12 lakh rupees doesn't come under tax, whatever. Here, until 12 lakhs, whatever profit you make is taxed under the normal tax regime. Whereas if you make any profits on your crypto transactions or your share transfer, share buying and selling, the actual share buying and selling, the profit that is made, you have to pay capital gain taxes for that transaction standalone. No, you can't consider that I made 10 rupees, but my annual income is below 12 lakhs. So still I don't pay tax on it. That is a different way of treatment, right? So that is one option, or that is one advantage where you get, when you do options, you get the profits are taxed under your normal tax slab in India. The second advantage with futures and options again here is you can also take the short calls.
Yes.
Like if you have to buy some, basic rule of trading is you buy low, sell high, right? So if you have to sell high, you first have to buy it. Then you can sell it. That is what happens in stock. But in futures and this perpetuals, whatever we talk about derivatives, you can also sell because you're betting. Even if you don't have a stop, you can still take a bet. So that is one advantage. And the other advantage you get here is you can use leverage. Basically, you borrow money for your trade. Whereas spot, you only buy with what money you have. Right? With perpetuals, it's like you also have a credit card with you. You put in some money, you also have a credit card. You borrow some money to make the purchase.
Yeah.
It's a rough idea, but it's not the exact way of explaining. This is how I have understood.
Is there any risk in this perpetual?
Definitely. Definitely it has risk. It has a lot more risk than, that's what I was trying to tell, the stock, as this happened, 80% corrections happened in most of the markets. If you had put 100 rupees, you still had a chance that you would have left with 20 rupees at least. But in perpetuals, you were liquidated. That money, what you had also is gone, and the credit that you borrowed to take calls, even that is gone. Now you have lost your money, plus you also owe that person whom you have taken a loan for.
And the money flow in perpetuals is always, as usual in trading, zero sum. It's always zero sum, mostly negative sum. I will tell you why. Because if you are winning some money, it's not because some new value is being created. It's actually the losing person is paying you the winning amount. This happens every time. So in this volatile market, what happened is, so there should always be a person who is losing so that your winning trade gets profited. But in this market, as people were getting liquidated back to back, exchanges don't have any other go. Like if your trade is winning like huge amounts, you are making thousands of dollars, but there is no opposite party to take on the order and bet against you. What they do is they just close your order. And people were furious on it because in Hyperliquid, the biggest perpetual dexes, feature called ADL happened, like auto deleveraging. This has never happened in Hyperliquid's history. Like in its operation time, this has never happened. This is the first time this happened because in Hyperliquid, some trades were winning, but there were no opposing trades to fund them as they got liquidated. So Hyperliquid started to automatically taking them out of the system. Like whatever profits you have, that's enough. Like we don't have much more money to provide with you. This also happened, and
Like,
yeah.
what I'm just trying to understand is like, let's say, is Vaishnav going to come to office today, right? Jeno and Isha say no, and I say yes, right?
Yes.
We have taken a bet that I would say yes, he will come, and they say no, he won't come.
Yeah.
If Nisha was not available, if it's only both of us,
Yes.
she said yes. She said no, he won't come, and I said yes. So there are two parties.
Yes.
So even if I win, let's say you come to the office, I win, she's going to give me money.
Yes.
If you don't come, I give her money, right? So here in your scenario, what you're saying is because of this sudden movement, which was happening unidirectional,
Yes.
people are getting forced liquidated.
Yes.
Like there were no one to bet, right? I mean, example, same thing. You're so consistent to office saying that I didn't even dare to take a bet. Said yes, he will come to the office, right?
Okay.
So it's only those two people who are there. So there's no other parties. So whom will they bet against? So the entire game gets cancelled.
Yes.
The contest gets cancelled.
Against the two,
The two also are not available. There are only 8 right now. The only one side of the table is people are there. The other side there's no one else.
Even this is not numbers game. Even you can think like this. If there is 10 people on one side to bet and there's one guy, but these 10 people have 10 rupees each.
It's the value as well.
yeah.
Not just the people, it's the value as well.
That guy has 100, okay. Now the value is matched. If one wins, the other will take the opposite's cash, everything. One match ends. The one guy loses $100. For the next match, he should bring in new liquidity, new money in.
So it says, we have betted against him, Vaishnav example. I would say he will come to office. Let's say he comes to office. The bet is for 50 rupees. You both give me 50 rupees. Yes. So I make 100 rupees basically, right? So let's say he doesn't come to office as you guys betted, right? The bet was for 50 rupees. I have to give you 50. Because it was only me who was betting against you two, right? And the bet was for 50. So I'm supposed to pay for both of you 50. Getting it? If I win, I make 100. If I lose, I still
have to pay 100. Yes.
But here the bet amount is 50.
That's it. So we had a good cover up of what's perpetual in a very layman term and what happened in the markets.
If someone can tell something technical about it, I'll be happy about it. Probably I'll brush up my, I'll update.
Okay, so there's the technical things comes under like the mathematics which goes around in the softwares. Like the theory is the same. There should be a winning side, there should be a losing side. But now when maths kick in is the kind of leverage people take in. If you are taking 2x, let's say, and you have huge margin, the price movements won't take your margin up much. Like out of 100 rupees, it may be taking 10 rupee, 20 rupee as the premium. But if you've set a 50x leverage, then that level for taking 50x leverage in the sense means you're taking
50x amount of what you already have.
Yes. So if you have 10 rupees or say $10,
you're taking 500 rupees.
$500 is what is the trade volume.
That's the trade value.
Yeah. So if there is a huge debt, it's a debt actually, right? $500 is a debt.
$490 is it?
$490 is a debt on your name. And if you don't have the collateral, which is the margin,
cover up the debt.
Something
goes bad.
Then even a slight wick will finish off you.
Correct.
Because the collateral is so low to write it off.
That's why it's a double-edged sword, no? Leverage is a double-edged sword. You make a lot of money, you also lose a lot of money.
So that's where mathematics kick in. Another thing is also like in exchange kind of systems, there are not only two parties betting against each other. There are also market makers who have huge liquidity. They also take huge trades against each other. They make the market moving, like because
in this scenario, what we saw is there were a couple of people who went on Hyperliquid and took a short call just before crashing the market. Right? They crashed by $90 million, and they took I don't know what was the trade amount that they took a hyper liquid, but they made quite a good amount of
Yeah.
almost $200 million.
153 million.
Almost $200 million they made just by betting on hyper liquid.
Yes.
Yeah, 186
Just
million
crash.
dollars.
$90 million getting liquidated, and this simultaneously happening on hyper liquid. The calls being taken there. It is actually a coordinated attack. It's not by just one person. There were a couple of people who were informed about this attack going to happen. They did take advantage of it. I mean, right? So there are just some close circles who are trying to find loopholes continuously and take advantage of it.
Yes.
They dropped $90 million just not in Bitcoin, right? They did it across the market. A lot of markets start to crash. Now the system is in such a way that it started to crash, bots started to kick in, saying that, okay, your stop loss limit is almost achieved. Let's close this deal. Let's close this deal. Deals got closed.
Yes.
Deals got closed. The market still started to drop. More deals started to
Closing. Yeah.
the $19 million which it started, that blip, as he said, the blip got it to $19 billion.
Yeah, across the market. Yeah.
So because it was falling so sharp, there was no one who were daring to hold the market at some point, because they didn't want to get sucked into a deep black hole again, right? So everyone was waiting.
Yeah.
It might go up again, right? And that wait was not even more than 2 minutes. In 2 minutes, again, it shot up to 60%. So people who took a shot at that point, they also got liquidated. Right? It fell down by 80%. In next 2 minutes, it again went up by 60%. The people who had shorted lost money. So for people are
They lost money.
They all lost a lot of money.
Yes.
Because it was going down, people thought it'll still go down, which went down for a few minutes. They shorted, it went down. And in 2 minutes, before they could even mentally calculate how much money, where should their next exit point should be, the market again shot up again. It liquidated the ones who also shorted.
Yes.
Right? It was a total panic in the market.
Yes.
People didn't know where the market was going. They didn't, even if they knew where things were going, there was no money left in their wallet. Everything was eroded. They got liquidated. It was a total mayhem.
Yes.
Market.
Yeah.
So let's see how. I mean, still people are still digesting.
The fact.
With all these things, what has happened. There are a lot of news that is flowing in from all directions. A lot of sad news of deaths and everything happening. Unfortunately, it will take some time to stabilize. I mean, probably Vaishnav and Geno, they can give us some good points that we as investors could follow, so that we are insulated with such kind of attacks or such kind of incidents repeating for us again.
Okay. Yeah.
I believe we can invest only when we can know that we can lose that money.
That's one thing. The key takeaways from like these kind of lessons, like all the crashes which happen, is just there are three main takeaways which I can say. Don't do leverage, as you said. Don't even touch leverage if you don't know what's the game. Yeah.
Okay.
You should see, because there's also a party that there are also some smart traders who hedge against their position. They spot buy some assets and put a short in the markets, so that if the price appreciates, they will sell it in spot. If the price depreciates, they will get the profit out of there, and they will farm funding fees. So people who are even doing complex strategies get tricked. So get the point.
This scenario,
Now,
even what a complex scenario you would have put here, even if you're hedged against your call,
Yeah.
you lost money both ways.
Both
right?
ways. That's what.
Because it went down so fast, it went up. See, when I kind of closely watched
So
it.
the
timing-
here who got hit is not just retailers, even the hedge funds, market maker themselves got hit. Like everybody got hit so bad.
And there's no single source of saying that this problem came from here.
Yeah.
It's a cascading level of problem. It's like a domino effect.
So that's what
it
I
started
said.
somewhere, it ended up somewhere else.
So as a trader, avoid leverage as much as possible. That's one thing.
Okay. Or use leverage wisely.
Wisely, very wisely.
Wisely.
And second point which I would say is take profits at the right times. Like don't keep your greed.
They keep booking profits.
Yeah, keep booking profits. Don't just see your paper profits and be happy about it. Realize those profits. Don't have unrealized profits till a point. it goes off. So have realized profits. Don't use leverage a lot. Then the third thing which I want to, is there any other takeaway?
The problem was with balance, right? So you have to keep your funds probably trading.
Keep your eggs in a
Every basket, not only in one basket, then you'll use that.
spread it out. Yeah.
Even a mistake of a single exchange can shake every investors. So they will come with only a little bit of a kerchief. They are not going to meet your losses. Are not even going to console you.
Like what she said says, a small piece of kerchief cannot wipe so many tears.
Yeah.
It can't soak up so much of tears.
Yeah.
So it's your sole responsibility.
Yeah, of course. It's your money. It's your responsibility. You make money. It's yours. You lose money. It's yours.
After losing money, we can't blame anyone here.
I mean, the mistakes can happen from any side. Right? Ultimately, what you make or what you lose is just that money. With that money comes, because money is very emotional to us, we lose our mental balance.
Yes.
Yeah, probably that should, anything that is affecting your peace of mind and your sleep, if that is happening, that means you're over invested on something, right? So it's, I mean, if your investments are good until you can have a peaceful night's sleep, right, without having your blood pressure going all the way, right? So I think, yeah, keep your investments in sync with your personal well-being. If you're over invested, things like this might drastically affect life.
So in simple, don't leverage your the value of your house. You at least need your house to sleep after you losing money.
So even in this gloom, there are also some fun stuff going on crypto Twitter.
I don't think this is
Yeah,
a week
but
that we haven't talked about any fun stuff.
It's not fun.
Rivers and streams of tears
Yeah.
flowing everywhere.
It's not fun. It's also a sad thing, but I will show you like what kind of mockery was going around a particular protocol. Like, can somebody give me the idea like what they are?
Actually, it's about an intern at Eclipse Social takes revenge on an employer. So I don't think so that is funny, but let's see what Vaishnav is about to say.
So if you see the screen there is a protocol called Eclipse. Okay, they got a huge backlash because their community guy was not proper in the way of communication. He was so zesty. He used to mock everybody, that everybody started to hate the company altogether because of that single guy. And now what happened is, the main official page of Eclipse itself posted their tokens downfall. Like people started speculating like why they are putting their own tokens downfall. Like it has been all time, if you see, it's down 90%.
Right.
So people are now saying that okay, the intern which is running the who is working as a social media intern for the company is not getting paid by the team. So he's just
He is sabotaging his own.
he's sabotaging his own company. He's reposting that.
People are crazy.
And he also tweeted out like yesterday, on October 15th, he tweeted out, it's easy to hate your competitors, but do you have the courage to hate your community? Like he's just instigating his own community.
Please keep on going.
Yeah. So this is what I did found funny in crypto Twitter. Like there are protocols which are just
Thanks for getting us that funny.
digging their own graves, and people also speculating other like there's one guy who said it's a kind of strategy. It may be a kind of strategy like launch a token, open a massive short on token generation event or on your token itself, and you itself start talking bad about your token. It's profit. So publicity is good. Either it's positive or negative is the motto of the social intent, I guess. So
If you know how to leverage it well.
Yeah, guys, you must have got a better idea about the crypto's wipe of what has happened, and perpetual market has been cleanly explained. And we also had funny news about Intern, about Eclipse Social. We'll catch up soon, and do like, share, and subscribe our video, and share your comments on the comment section. Yes, thank you. Bye.